Lots to discuss then in terms of the European banking scene. I wonder if you could give us your thoughts, though, on whether we are creating zombie companies. When you look at the companies that you've lent to or the sector has lent to during these tough times, is this a concern for you?
Well, I do think that first, if we look into our region, which has entered the crisis from a position of strength, with strong government and with strong also public households. So all of these countries have been able to help and give liquidity support in this time. Now, clearly, as the economy is falling throughout the world, if you pour in liquidity slash leverage, clearly at some stage, solvency ratios will hit rock bottom. So I think what has been done so far was a good response to the crisis, a firm and rigid response to the crisis, but it's really now about taking the next steps. How can we strengthen corporate balance sheets who are now under pressure because of falling turnovers, because of falling profitability, and in a context where we see in our region economies already picking up again, sort of demand building up. I think now it's vitally important that we also create a capital market situation where companies get access to equity financing.
Have you seen then, and I mean, your biggest markets, Bernd, are in Central and Eastern Europe. Have you seen an acceleration of bankruptcies in those markets, or do you expect us to see that in the last quarter of this year?
We have not seen any kind of increases in insolvency rates. We have not seen yet any kind of increases of delinquencies. And this is clear for two reasons. One, the governments implemented very quickly a moratoria for both private as well as for corporate segments. So people who chose not to repay could sort of pause with the installment repayments. So liquidity was eased, was softened, and also the government guaranteed loans which were provided bridged a situation where the economy was put to a halt. Now, do I expect insolvencies to rise this year? I don't think significantly, but I do think as all of these developments will have a lagging impact on corporate balance sheets, we will see probably next year as a year where we will see insolvencies rise, where we'll also see probably unemployment becoming more permanent. But still, I think...
do you think, though, that loan loss provisions at the bank have peaked, Bernd? Do you think loan loss provisions have peaked? I think you thought so in the second quarter.
Yes, I do think that what we have done is we did everything we could to build provisions for the increase in insolvencies, which we expect in 2021. So we intended and we did front load as much provisions as we could so as not to kick the can down the road.
You know, you've said in the past that you think, I believe you said you think governments should be investing not only in company debt, but also in equity, which makes sense and it's something that we haven't really seen governments really get closer to. What do you think banks like Erste can do in that sense?
I think playing a very important role in a context where equity needs to be brokered to companies whose balance sheet needs to be strengthened. I think government's role is not only in participating in equity contributions, but much rather in creating an environment where it's attractive to invest into companies. So creating a tax situation which is more attractive for investors and creating a situation where also retail investors find it more easily to invest. So I think this is something where the whole capital market environment needs to be strengthened, where capital market financing needs to be at a level playing field with bank debt financing. And so far,
the banks,
Can I ask
about dividends, Bernd? Obviously, the ECB.
Yes. Mm-hmm.
Yeah, the ECB has put limitations on your ability to pay dividends. Do you think the limits are fair? What would you have paid out for this year if it hadn't been for these recommendations from the ECB? And what does it mean for the ban in the future? Do you think the ECB should now lift the ban?
We have postponed our annual General Assembly, which was planned to be for May, before ECB has come up with any kind of recommendation. And with that decision, we also postponed our decision on our proposal to pay a dividend, because we said at the beginning of the year when the crisis broke out that as long as there's little visibility on how the recovery out of this crisis will work, is not the proper time to pay a dividend. And we have said at that time, we want to take that decision in the fourth quarter of this year, at a time when we believed that there would be more visibility of the recovery shape. We think now we do have a lot more visibility now. We intend to hold our AGM in 2020, at the end of 2020. We have been very profitable in 2019. We have been profitable in 2020, and we see our economies in all of our countries recovering already. So I think there's every justification to pay a dividend for both 2019 and 2020. But clearly, we also will not act against the recommendation of the ECB.